Good afternoon, ladies and gentlemen. My name is William H. Thompson, CPA, MBA, and I am the founder of RE Accounting and Tax Professionals. We help real estate investors maximize return on investment through expert tax strategies, while at the same time helping them to build and sustain a legacy. Welcome to Free Information Friday. Today I'm going to talk about the home office deduction and travel. So, question I always get is, do real estate investors qualify for a home office deduction? And the answer is, it depends. And what I mean by that is, you have to have your trade or business or your rental business has to qualify under Code Section 162. Now let me give you an example. If you have anywhere from 2 to 4 properties, and you actively manage those properties, you're absolutely going to qualify for Code Section 162. But that's something you always want to discuss with your tax preparer. Okay. So, once we determine that you in fact do qualify to take the home office deduction, the question is, can you take the home office deduction? Okay. Now that depends again. A home office deduction can be taken if you have enough income to take it against. For example, let's say that you have, let's say $20,000 worth of income and $15,000 worth of expense. That gives you a $5,000 profit. Now, if your property made income, which it did in this example, you're going to be able to take the home office deduction up to that $5,000. Anything over that, you would have to carry over. For example, let's say your home office deduction came in at $6,000. Well, you'd be able to get the $5,000 worth of home office deduction to zero out your income, but the $1,000 would be carried over until you have income where you can take that deduction. All right? Now, let's assume, and this is for most, if planned properly, it's for most real estate investors, you're not going to be able to take the home office deduction because between your expenses, your out-of-pocket expenses, which are your cash expenses that you're actually paying things for, like your property taxes, your electric, your gas, and depreciation, you're usually going to, and you should have, a tax loss, so that home office deduction will be carried forward. But why is it important to have at least establish your place as your home office as a place of business? I'll tell you why. Travel. Travel, travel, travel. If you travel from your primary residence to, say, Home Depot or one of your rental properties, and you don't have established a home office, those are commuting miles and you can't take them. So once you establish your home office as a place of business, anytime you leave your place of business, for example, you go to Home Depot to pick up supplies, you go to your property to meet with prospective tenants or vendors, that now qualifies as travel. And that can be pretty powerful if you add up all the places that you go for your business. But I want to really highlight the example for you. Let's say that you're a full-time real estate investor and you purchase an F-150. Now the F-150 qualifies as a business, it can qualify as a business write-off for you. So here's the example. Let's say that you use that F-150 totally for business, 100% for business. Well, the year you purchase that truck, you can write it off. Now, this is assuming we go back to, and I hope we do, go back to 100% bonus depreciation. So, picture this. Being able to write that whole truck off in 1 year, it's going to reduce your bottom line to an even significant, increase your bottom line or your loss to a big loss where you can deduct it against your ordinary income. Now, if you can't deduct it against your ordinary income, you don't lose the loss. It gets carried forward until you have passive income to offset it against. So it's extremely powerful to make sure that you establish your home office as a place of business. Now, the other question I get is, well, once we establish the home office as a place of business, how do I record it? How do I track it? Well, there's actually two methods, the simplified method and the actual method. Now, the simplified method is, just as it says, simple. You simply take $5 a square foot up to 300 square foot. So what you do is you measure your office, simply measure the size of your office, and you can multiply it by $5, and that will be a deduction. So let's say you get to the maximum. Your home office is 300 square foot. That's going to be a $1,500 deduction. Now that's the easy way to do it. The actual method is where you're going to take the square footage of your office and divide it by the total square footage of your entire home. And whatever percentage that is, you get to write off your bills. I'll give you an example. Let's say that you have a 3,000 square foot home, and 300 square foot of that is your office. That's 10%. So 10% of your electric bill, 10% of your gas bill, 10% of repairs and maintenance, anything that relates to your property. That's customary and ordinary. You can actually you're going to be able to deduct 10% of that. So the whole point of this conversation is to make sure that you establish a home office as your place of business, because you're going to be able to get that travel expense, which can significantly reduce your bottom line. And by doing that, you're going to pay less in federal income taxes. So I encourage everybody, as painful as it may sound, to document everything that you do in regards to your home office. Now, I hope this segment of Free Information Friday was helpful to you. And if you're a real estate investor who wants to maximize their return on investment, while at the same time helping to build and sustain your legacy, book a call with our firm. And remember, only you can create your empire, but we are here to help every step of the way. Thank you, and I wish you much success on your real estate journey.